Hi, welcome back. The fiat system is dying, governments are racing into Bitcoin, and banks are panicking. But here's what nobody's telling you. Bitcoin doesn't just save you money, it actually changes you. Peter Dunworth, I've been following for many months now, and every time I review one of his videos, he does take it to the next level and start introducing some interesting, rather different perspectives on Bitcoin, the value proposition of Bitcoin, and how it actually changes us, which is really the major theme that I'd like to discuss with you today. There's 6 points I want to run through and give you my own personal takeaways. The first of which is the first chapter, which is around you don't change Bitcoin, Bitcoin actually changes you. Now, it's rather interesting in the way he's approached the topic, because it is true that given that Bitcoin is fundamentally run under this proof of work consensus mechanism, which is different from the proof of stake, which you might have heard, which is where the majority of the other digital asset tokens like Ethereum and all the rest of it, where they run under a different consensus mechanism regime. Whereas with Bitcoin is proof of work, which means that it uses computational power and energy in order to mine new Bitcoins. That is what proof of work mechanism is about. And the way Peter's approached the topic is it kind of restores that sense of integrity into earning your bread and butter through labor, which is what all of us, if not the majority of us, do in our day-to-day lives. We wake up each morning, every day, to go to work in order to earn that day's check. And that in itself is like the proof of work consensus mechanism which Bitcoin runs. So there is a parallel there between the two, and the way he's explained that makes total sense. So he went on to say that restoring integrity to labor, so every day's check that you earn through that labor, you can effectively convert that into Satoshi and store it in your Bitcoin wallet as a savings account for that long-term wealth, capital preservation and growth into the future. So it's fully future-proofed in that sense. And certainly Bitcoin does simplify wealth building. There is no loopholes. There isn't any financial complexity that may come with investing other types of investment assets, financial instruments, which is quite heavy in terms of the literature, the processes. It's really complex for the normal individual to actually interpret and go through that arduous process of doing their due diligence. So it certainly, with Bitcoin, simplifies all of that completely. One Satoshi more per year is like winning. And he actually directly extrapolates to emerging economies plagued by inflation, where Bitcoin is increasingly becoming that hedge against inflation and hedge against entropy, if you like to put it in that global term. So what do I mean by entropy in this case is no matter the actual chaos that surrounds us through wars, through economic collapse, fiat collapse, it is becoming slowly but surely, it's fair to say it isn't now, but slowly but surely it is becoming that hedge against entropy, not just hedge against inflation. And we have seen instances of this happening. You might have heard in some of my videos, which is all the more reason why you ought to subscribe to this channel. I've published an interesting video around Bitcoin decoupling from TradeFi, which is an example of what I meant by Bitcoin becoming a hedge against entropy and against inflation. So that's the first topic. The next topic is where he mentioned the notion of double-edged sword of government involvement. It is true that through history, governments and nation states often come with well-intended objectives or goodwill, particularly when they're in their electoral campaigns and start to make these wonderful pledges and starting to throw a lot of candy to their electorate in order to win over their votes and then bring them into the office. But it does come with unintended consequences. So you might have heard about there is a handful of Bitcoin spot ETFs and the emergence of strategic reserves. The US is clearly spearheading that. But what does this mean in terms of unintended consequence? What would those look like potentially? Could they act as a Trojan horse? Maybe. So you might have heard there is an in-kind redemption, which is like kind of a redemption clause. So whenever people want to invest into the Bitcoin spot ETFs, they won't have to encounter a taxable event. They can simply swap assets into Bitcoin without the need to incur tax payments, which is like some sort of a potential safety mechanism. But regardless of all of this, it's fair to say that global governments may appear to help Bitcoin, but future regimes could certainly weaponize those reserves, particularly in democratic countries. It comes to a point where they could, given the change of hands of power, they could use that to weaponize those reserves. So those ETFs and the strategic reserves that we're hearing an awful lot in the news recently. So the bottom line of this is we need to still remain vigilant and really take it upon ourselves to do something about it. For me, ultimately, nothing beats self-custody of your digital assets, and certainly with Bitcoin. So as a Bitcoin investor myself and a hodler, I use self-custody to hold the majority of my holdings under self-custody arrangement. But that comes with additional responsibility and perhaps a little bit of headache. But I think the actual benefit of self-custody arrangement completely overwhelms the cost of actually running the Bitcoins yourself under self-custody arrangement, for the reasons that I mentioned in today's episode in videos in my channel, which is all the more reason why you ought to subscribe. So a very interesting take from Peter on that. The next point about where he mentioned the unsustainable fiat system, and again I've explained this in a separate video, where he made this kind of analogy of an inverted pyramid structure, where you have the majority of the debt sitting at the very top of that inverted pyramid and little equity and collateral underneath it. That in itself clearly presents a huge issue in the overarching global financial system, where we have the majority of our wealth based on debt, supported by little amount of capital or equity. If we kind of bring it back to how it ought to be, which is upright pyramid structural layout, where you have little debt at the very top and the base layer, where if we start to bring all of our analog assets from TradeFi, from fiat into Bitcoin as that pristine collateral under this over collateralized system, and we won't have to fall into the painstaking process of bailing out banks that find themselves in a difficult situation. Look at the example in 2008 GFC, the global financial crisis 2008. There's been a hell of a lot of bailouts from taxpayer money. We want to avoid that situation. So I think what Peter's trying to say is, if we convert from the inverted into an over collateralized system, where the majority of the equity underneath is based on Bitcoin as that pristine collateral, then we can avert any future financial crisis around the corner, which is all the more reason why we ought to invest into the Bitcoin asset class into the long term. The next point is around SAB 121. This is mostly a US-centric standard or regulation, which has been recently repealed. What was SAB 121 all about? Well, Peter explained it in a snippet. It effectively required banks to hold a one-on-one capital requirement. So every $100, you need to have $100 worth of Bitcoin as a capital requirement in the bank itself in order to custody Bitcoin. Well, there's been a recent repeal of that given the incoming Trump administration. That has been repealed, so now banks can effectively custody Bitcoin without the need to have this one-on-one capital requirement between Bitcoin and the fiat value of that asset. This is significant because this opens up the doors, the floodgates if you like, for the rest of the financial institutions, banks, insurers and all the rest of it, particularly banks, to start effectively providing custody service of Bitcoin to its clients base. So this is in effect a rather interesting game changer, which unlocks savings and loan products with Bitcoin backing. So this is like the first domino chip that's fallen, which then enables Bitcoin to immerse itself into the mainstream banking system, where they can effectively provide Bitcoin custody service to its clients. So this applies to every country, particularly with tier 1 capital banking models. So the potential is there to spread rapidly through the G20 financial institutions. So this is rather interesting, and there may be some Bitcoin maximalists out there who are quite weary about that, but I can understand and sympathize with them. But given that Bitcoin is the only truly decentralized system out there, we're not going to have that issue of TradeFi influence over the rest of the Bitcoin investors in the network, because of its consensus mechanisms, and it would effectively require every node, every miner, every participant in the network to agree changes being proposed to the network. So in terms of exerting influence over the Bitcoin network, that's not a concern because of its consensus mechanism built into the network itself. So I'm not concerned about that at all. The next point about MicroStrategy Genius Bitcoin Standard Playbook strategy, where Michael Saylor has been indeed pivotal in the way he's actually established the Bitcoin corporate playbook for companies to follow suit, because they're all encountered the same problem which Michael have had to endure 4 or 5 years ago when he started on this journey, where the amount of corporate treasury reserves were predominantly held under fiat and treasury bonds. That was like the corporate playbook at that time, until Michael came in and revisited and completely overhauled that situation and said, well, listen, given that fiat depreciates in value in terms of currency value, and the bonds are, completely worthless, if you combine the two, it really kind of fell well underneath the cost of capital, the standard nominal 10% inflation rate, and he was losing money. So he had to turn around the situation and included Bitcoin to replace the majority of his corporate treasury, which is what he's effectively done over the years. So the way he achieved that is I think at the start of his journey, he's moved 500 million back in 2020 or 2021 into Bitcoin. And ever since then, he began finding financial means, new products or ways to raise debt in order to convert it to Bitcoin, which over time will prove accretive to shareholders. So he's effectively bypassed the P&L of doing that, which means not having to pay taxes on the balance sheet, value gains, which is absolutely financial genius. There is one thing that I'm not wholly happy about, because I am a MicroStrategy stockholder myself. Even though I understand that he has had to take the approach of raising debt through at the market offering, which effectively means selling more stocks in order to dilute the value of the rest of the shareholder values in order to buy Bitcoin. I think there is other ways he can achieve that, and the most notable way he can do that without having to dilute any further on the existing MicroStrategy shareholder value is through convertible debt. What I'm saying is he ought to abandon that and look for other non-dilutive means to achieve that strategic aim, which is raise debt to buy Bitcoin. I think convertible bonds is an example of a non-dilutive means to achieve that same goal, but he should effectively abandon ATM, the at the market offering, which is hurting the rest of us at the moment. And really what he's done there is companies starting to follow suit. You might have heard of MetaPlanet, Japanese company. It's now the leading stock in the country. Ever since they've turned around and adopted the MicroStrategy Bitcoin Standard Playbook, they effectively do the same thing. You've got Simon Scientific, and you've got well over 150 registered public companies around the world who effectively followed the same Bitcoin standard from Michael Saylor and his team. So this is the expectation from this is set to continue. We're going to be seeing more and more companies following suit. And there's an interesting video that I published the other day where 21 Capital, which is a company that's recently been born out, which is headed by Jack Mallers, and is comprised of 3 founding companies. You've got Tether, as we all know, is the leader private issuer of dollar-backed stablecoin. You got SoftBank, and you got Cantor Fitzgerald. This last one is quite interesting because we got Lutnick, who is the US Chamber of Commerce Secretary, is actually a founding member of that company. So what they're trying to do with this 21 Capital is to effectively copy what MicroStrategy is doing, but in addition to that, in order to differentiate itself with MicroStrategy or strategy, is to become a Bitcoin development company. So providing a raft of new financial products, mainly Bitcoin lending products, to its customers, so they don't have to part from their Bitcoins in order to, let's say, take out a fiat loan, where they can continue to use their Bitcoins that they already have as collateral in order to take out a fiat loan. This is what 21 Capital and Strike headed by Jack Mallers, is offering at the moment. So there's a lot more going on there, so I encourage you to watch that space. And then lastly, the notion about free markets, bonds and Bitcoin, and the distinction between the free market versus a crony capitalism. I think it's true that under TradeFi, it isn't a free market because it's managed by people, by the elite, by the collective, which could fall foul in terms of goodwill gesture for the good of the public as a whole, right? So, humans are susceptible to fraud, they're susceptible to wrongdoing. So there isn't such thing, unfortunately, as a free market. But if we move this kind of free market fiat regime into one of a free market underpinned by maths, underpinned by truth, underpinned by, let's say, Bitcoin, well, if we transition ourselves over to that new world, well, there's no cheating Bitcoin, right? As an example, is run by math, is run by computational power. There's no influence that can be exerted over the network. So having a Bitcoin-backed sovereign debt under that regime could certainly reset the real yields of return, which is what Peter attempted to explain through the notion of Bitcoin-backed loan or Bitcoin-backed bond, which is effectively the same thing, right? Let's take the example of a Bitcoin-backed bond where if the US government issued their treasury bonds and let's say have a small amount of the principal backed by a Bitcoin component, upon maturity of those bonds, let's say at the end of the 5 years, they will have to return the original principal note to the investors out there and the interest payments that they committed. But what's interesting about a Bitcoin-backed bond is there's a win-win where the government, upon maturity, they'll be able to capitalize on the gains of the interest payment they'll have to pay back to those bond investors, but also at the market value of the Bitcoin itself, which is bound to be accretive and substantially more interesting rate of return for the government to cash in and to use that in other financial endeavours or commitments that they have towards its citizens and electorate. This is what I mean. It is a win-win situation for the governments issuing these Bitcoin-backed bonds, as well as the investors receiving their interest payments and their principal capital in return. So this is rather interesting notion, and I have made a few videos explaining that in a little bit more detail, which I encourage you to subscribe and watch. So as a summary, so what does this all mean for you as a Bitcoin investor? It means governments can't protect your wealth, banks won't, and the only truly sovereign asset left on earth, as we all know, is Bitcoin. We're seeing global tide shift. The SAB 1-to-1 is just the beginning. Saylor's playbook, it's now a global roadmap. So if this video helped clarify the chaos, smash that like button, share it with your family, your crypto crew, your team at work. Knowledge like this spreads like wildfire, and we're still early on the journey. Subscribe for the boldest takes on Bitcoin, blockchain technology, and the future of finance. So I'll see you in the next one.